Good morning, traders. It is 8:01 a.m. Chicago time on Wednesday, the 26th of September, 2018. Thanks for joining me again. A reminder, this broadcast is best viewed in 1080p. You can select the resolution on your YouTube screen. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, seeing a mixed bag all across. Crude oil is off. It is the laggard today, trading at 71.83 on the November contract, off 44 cents or 0.6%. Gold is also off. The dollar's strong today. The dollar index futures are the strongest of the bunch, up 21 cents or 0.22%. Remember, this is ahead of the FOMC today, which is scheduled for 2 p.m. Eastern U.S. time, 2 p.m. And in addition to that, there's really on deck today. What we have is, like I said, the FOMC is the key release, but also 10 o'clock we get new home sales, expecting 0.63 and 0.5%. So the market is expecting 2 to 2.25% today, looking for a rise of an increase of 25 basis points. And then we have the interview with the Fed chair this afternoon as well, in addition to the oil inventories, the weekly oil inventories, which come out on Wednesdays at 10:30 Eastern. So that's what's on deck there. What do we have from yesterday? What did we expect versus what we got? And I got to tell you, probably leaned too hard towards the scenario where we would push back up to 29.36 and 38, and the market just wouldn't have it. Instead, it played out scenario 3, falling back into the range and testing all the way through down to 29.20 for the value area and holding steady in there. Scenario 3 is basically what played out. It was the scenario that's the third most likely to happen. Here's what actually happened. Yesterday, just to see what kind of action we have, I set my bars to 5 pixel per bar and see how much of the screen that occupies. How do you like that for science? Yesterday was very lazy. Yesterday's open was very, very, very sleep-inducing, cure for insomnia. Just really felt like a holiday open. However, we did get some clues early on. Sellers just would not let go. The market opened at 29.20, right at the high of the prior day, on Monday's high, and only pushed up 5 ticks before sellers came in. So the opening swing was 29.30 and a quarter down to 29.27. And then from there, we dilly-dallied. We stayed in there for about 5 minutes before we started to extend lower, and then we extended through the range, and this was our scenario 3 target right there. Market then gets a lift and then consolidates into the close, extending down but not taking out the prior day's low. Prior day's low is 29.1775, and it held steady there. Yesterday was definitely not a balanced day. Yesterday we saw multiple distributions forming. Really a normal variation day, and there was really no real consensus on value yesterday. However, if you look at what we've done over the last couple of days, we are overall in balance over the last couple of days. This is the profile that's generated from that. Let's change it to something a little more visible. Volume shading red. How about that? So that's that's what we're dealing with currently. We're in the gap zone. We're stuck in the gap zone that was left behind last Thursday, and we closed it on Monday. But we're holding on to these prices for now. With FOMC today, we expect more of the same, kind of a quiet, lazy trade. What's the point of committing? What's the point of the higher time frames, whatever they are, committing ahead of the FOMC? It's today is the commentaries is expected to signify the end of an accommodative era, as the economy is pretty hot and has been for quite some time now. We've been in a rally economy for almost 10 years. So this is what things are shaping up to be. Pay attention here. We have a high volume node where we left the point of control on Monday at 25.25, and then we have an MC point of control where we traded yesterday at 21, and we are dead in between, right at the low volume node. That's where we are. So that's the history from yesterday. What happened overnight? Overnight, fairly relatively lazy trade. The market just started to climb right away in the Asian session, and then once the Europeans kicked in, kicked in, the volume picked up a little bit, but overall, we didn't end up going anywhere. This was short covering, a short covering rally on the Asian Open, on the Asian trade, but since then we've basically gone into balance, and now we're breaking through the mid and pushing lower, pushing back towards yesterday's close and yesterday's point of control, 21 quarter and 21 even. So that's the recap. Let's look at the bigger picture. We've had a decent rally, and we are just pulling back. We've pulled back to about 50% of this last swing right here. This is the 50% mark from Monday, and we're holding steady in this gap zone that we left behind last Thursday, and that's where we are. We are in balance. We know that we've got some coiling going on. Yesterday's volume was not all that impressive. Yesterday's RTH volumes, 874,000. The prior day's volumes, 956,000. It's not all that great for this time of year, and we're balancing for the last 2 days. So caution here, as the move out of here could be fairly strong. And of course, we have a strong incentive today with the FOMC to make a move, to reprice, especially in products like gold, the treasuries, and so on. Okay, so that's the big picture recap. What are we looking for today? This morning, it's really, I don't have any, unfortunately, I don't have any bugging equipment in the FOMC meeting or anything, but and I don't have friends in high places that'll tell me what's likely to be said before it happens. But today we are opening dead into the middle of the value area over the last couple days. I'm expecting this to be a relatively choppy market this morning. It is likely to try higher, try lower, and just keep swinging. Today's probably going to be an outside-in type trade where we're fading the edges back into value until the FOMC comes along, and then we're looking for the traditional three move push. Once that's announced, and it's anybody's call. All I can do today is say, just keep an eye on your targets. Where would we go once we break? And below us, 2907, 2900 are key. And then above us, 38, 36, and 38 are key. Beyond that, we are pushing through into all-time highs again. So there is no scenario 1, 2, 3, 4, 5 today. It is FOMC on a balanced open. It's anybody's call today. So it's really all I have to say here is, if we break out of the two-day zone before the FOMC, I'm likely to fade it if it's in my pre-designated stock zone area, the gray bands that you see here. And I'm looking for fades back into the middle until the FOMC comes out. Once it does, we need to wait to see what the big move, what direction the big move is heading in, and then we keep an eye on our targets again: 36, 38 above, and 07 and 2900 below. Okay, so that's at 2 o'clock Eastern. 2 o'clock Eastern. I'll leave you with those thoughts. Good luck today, and I'll catch you tomorrow. Take care.